afternoon. Joe Marchese from Human Ventures. We're actually a venture firm here in New York City, so welcome to New York for those of you from away. We're going to talk about investing in the next wave of technology and trends, but before we do that, we're going to have everyone introduce themselves. So, Neal, if you want to start.
Great, thank you, Joe, and thank you to iConnections for inviting me to be part of the panel today. I'm Neal Wilson. I'm a founder and co-CEO of EJF Capital. We're an asset manager based in Washington, D.C. with an office in London where we do some investing as well. We focus on regulatory event-driven strategies, so we manage about $5.5 billion. We do have, in the VC space, which we'll be talking about today, we focus on the fintech area. So we'll talk a little bit about that as well.
Hi, my name is Joyce, Zhang, Managing Director of the Walls Foundation. We are a $1.8 billion foundation here in New York. We manage global portfolios, and 20% of the portfolio allocates to venture across the globe.
Hi, my name is Amanda Groves. I'm a general partner at Plus Capital. We're an emerging growth stage fund based in Los Angeles, focused on consumer products, consumer technology, and enterprise technology businesses, typically around the Series B stage, leverage a collective of 80 or so celebrity clients to get asymmetric access and information about the best emerging growth stage companies.
So we're going to touch at each stage here. We're going to touch on the investing in companies, investing in asset managers, and what that allocation looks like. But just, if you're taking it very generally, let's start back down this side. What is the next wave of technology innovation? Like what are you looking at right now as an investor, and you're saying, this is the thing that's changing the most?
We spend a lot of time in consumer healthcare in particular, and I think that's a space that's changing quite quickly. There's an incredible amount of spend going into health and wellness broadly, and that means a lot of different things. On the consumer side of things, it might be investments in supplements businesses. Like, we're an investor in a company called Groons, which is a very fast-growing comprehensive daily nutrition supplement, all the way through to care delivery. And on the care delivery side of things, leveraging AI to be better, more efficient, better outcomes for patients, and sort of everything in between. So as we think about what the next wave of innovation looks like, particularly at the emerging growth stage, once our companies have achieved some level of product market fit, it's how do you leverage AI in the world of healthcare in particular to have better outcomes across many different sort of acute states. And it's been a really interesting theme to play with a lot of spend behind it.
Yeah, so we're under 3 minutes and we already we have AI.
I'm sorry.
No, it's fine. Actually, rapid fire for each of the panelists. Then let's try this. Do you believe that AI is a step change in platform on par with internet, mobile, cloud, as those were steps and AI is one? Less than, on par, or more than, as you're thinking about investing decisions? Let's go down.
Equal or more than.
Equal or more than those.
I think it's definitely like all the managers that we invest in Silicon Valley, they all pivot into AI 1 to 2 years ago. And we also saw venture managers in China and in India all in AI. So definitely this is something that would fundamentally change the landscape.
No, I think it's a massive game changer, and maybe not doing the rapid fire answer, I would say that, if you think back, I'm going to talk just a second about the Genius Act, which is dealing with the last panel probably talked about. I'm sorry I wasn't able to hear, but that's basically saying stable coins are, Congress, which can't agree on the time of day, is agreeing to pass stablecoin legislation. And I think if you go back 10 years, less than 1% of Americans owned crypto. And now you have Congress passing an act basically getting behind having stablecoin, which has more transactions last year than Visa and MasterCard combined. So I think it's a massive game changer, and I think with AI, it's just going to accelerate. It's like an accelerant on businesses, whether it be like our business, asset management, or in the kind of companies we invest in, which in the fintech area is a lot to do with payments and blockchain. And I think that it's going to be incredibly useful for fraud detection and compliance and all these expressions that when Congress gets around to legislating it, I think it's going to be even more of an accelerant.
So how do you express that in investing and in picking managers? Like, how do you evaluate whether an investment you're going to make or a manager you're going to pick is prepared for a platform shift of the magnitude we're talking about when it goes from pre-generative AI to post-generative AI. Like, are you looking at the founder's ability to adapt? Are you looking at the company's ability to integrate AI? I mean, we have a different rubric on our side because of how early we are, but I'm curious for each.
I'm happy to start. I guess from sort of a company evaluation perspective, it comes down to team first and foremost, to your point. Like, we're looking for product visionaries, tech visionaries, and then somebody who's really, really good at go-to-market, whether that's a consumer product offering or an enterprise technology offering. And so teams that are well-positioned to sort of reorient their technology teams to leverage AI to do what they're already doing, but do it better, is generally a good indicator. But it's not a pivot necessarily, right? Yeah. It's like building on what you're already good at and just doing it better. Like, if my job is to spend time with all of the best founders and operators within the venture capital ecosystem, and my job is to extract as much information as possible to build a market map and then choose the winner, if I can use AI to take better notes and build a better market map and do better due diligence, like, I should be doing that. But it's not like I've pivoted my role as a result. I'm just using it. And so I think individuals and teams that have the propensity for being agile and being interested in experimentation to do a better job is just like more of a personality trait than anything else.
I think for us, I would answer it from a different angle. I think that AI is definitely the general trends here, but when we evaluate managers, invest in venture managers, the things that we really cared about is whether this market has a lot of talent, whether we have enough resources, and whether the market itself is big enough. So I think that using an AI lenses is great, but we are also very worried about people all have the AI title, like the YC, probably 90% of the companies are all AI company. For us, we always want to find companies and managers that invest in more capital efficient products. And some of the examples I want to share is that we, for example, like we invest in South Korea facial mask companies that export globally and have built new brands. I think those are the things that were undercovers, and that's the things that get us really excited. Like, I think that a lot of people say they have advantage in AI, but what we're seeing is that a lot of people pivoted into AI. So we really want to distinguish who are the true AI experts that embedded into the ecosystem, who are just like using the trends and try to catch up.
Right. Yeah, and I would agree with what Joyce said. And I would just point out, I think the statistic is 2 years ago, 44% of software engineers used an AI tool, and now it's 63%. And so even from our first venture fund, focusing again on fintech, which was raised 2 years ago, to the one we're doing now, I mean, if the company is not, if they're doing software, if they're not integrating some level of AI in their development of software products, where they can kind of knit that product to the end user's, kind of tech, ecosystem. If they don't have that to reduce costs and to make the products fit the clients that they're trying to sell to, in our case, it's financial institutions, then it's like you're not going to pass muster at investment committee. And I think that's changed just even the last 2 years how critical that component is. So I think what Joyce said is 100% accurate.
Yeah, it's interesting. You all brought it up in different ways, whether it's fraud detection or just the operations. What AI is changing in our estimation when we look at founders is it's changing what the hard thing is. Like, the hard thing used to be tech. And tech was the hard thing to do. So our leaders were the apex people in tech, right? The Gates and the Zuckerbergs. And so now you're trying to identify people who are going to be good if tech becomes commoditized. Like, we have companies that have 2 engineers that should have had 10 by now. So if that's not the hard thing, what's the hard thing? And I think that there's a lot of talk right now about physical consumer packaged goods coming back, that consumer is coming back. I know you guys spend a lot of time in that area. What do you say to that?
Well, it's interesting what you just mentioned, which is like product isn't necessarily the hard thing anymore. Like, if you or I could make an app in 40 minutes or 30 minutes using AI, like that's pretty impressive given that I'm not necessarily a technologist.
Yeah.
So then the hard part becomes the go-to-market and the customer acquisition strategy,
Yes.
which is really where we focus at Plus, which is leveraging high-profile celebrity talents, people that are household names across movies, TV, music, and sports, and leveraging their audience and their influence over that audience to acquire customers a lot more efficiently than you were before. Because otherwise you're playing the ad spend game,
Right.
your CAC is through the roof on Google or Meta or whatever it is, and that's not particularly efficient. And so I guess going back to your question about consumer product, like in that vein, consumer products necessarily aren't that hard, right? There's not a ton of technological moat or even IP around consumer products. What makes a consumer product really big is adoption and stickiness and retention and behavior building, which celebrity can be really impactful for. I think it's interesting that a lot of people said consumer was dead for a while. Like over the last couple of years, it was very much out of vogue to be investing in the consumer ecosystem within the venture capital landscape. And then within the last 8 to 9 months, you've seen an incredible number of billion-dollar-plus acquisitions, largely in food and beverage, but in personal care as well. And I think it's reinvigorating this notion that you can generate venture style of returns in consumer. It's very hard to do in the same way it's very hard to return venture dollars everywhere. But if you can choose companies that have achieved product market fit, where the size of the preferred stack is a fraction of the overall valuation, you can very easily underwrite to a 3 to 5x in 3 to 5 years, so long as you have access to the best-in-class companies. And ultimately, that's what venture is about, right? It's
Right.
about access, and thankfully for us, our celebrity partners provide an incredible amount of access. Once we've identified great companies, being able to say, wouldn't you like to work with McConaughey on your future customer acquisition? Generally, the answer is yes.
Yep.
So we do a lot of that.
Yeah, I think to distinguish between two things you said there that I find very interesting. One is that what's the hard thing now? So building a product might not, but like physical goods in the real world has become very, very hard. And you know, we can get into complications of supply chains and so forth. So maybe that's part of the hard thing. But the much more important thing you said there, which is how do you reach consumers if in a new attention economy, right? We think a lot about this, like what does the attention economy look like? For the first time in, I would guess, everybody in this room's professional lives, search has gone down as a share of the internet, right? And giving way to ChatGPT. And even when you're searching on Google, you're getting results, which means everything downstream of search is a business model that's in trouble. And everybody's business model is downstream of search. I don't care if you're in the travel business or the finance business. And so people don't know how traffic is going to flow and how business models are. I mean, how do you think, so you have the celebrity side, how do you think about what options are for your financial products to grow, or when you're investing in managers, their understanding of kind of what the new order is going to be in media?
Well, I mean, one thing, I'm sorry, Joyce, but I would point out today, I thought there were 2 articles that tell you that this adoption phase I was talking about with crypto, now you have stable coins, in that 10-year period, you know, you have, in financials anyway, you have revolutions don't happen until you have massive adoption. And then you get regulation. And that's kind of how it plays out. I think with AI, we're in the adoption phase. And what you're seeing is today, there were 2 articles. One was WPP, which is an ad agency, right? That's more and by the way, I could not in 30 minutes do any kind of programming, but like you and Amanda can, Joe. But is basically, their value of the WPP, huge ad agency, which focuses on consumer products, big multi country, international companies, their stock's gone down 50%, and they fired their CEO today, right? Why? Because you don't sell the way they did advertising. Now it's done through social media, influencers, like that's how products are done. And what's driving that? AI. The other one is Wimbledon, right? It's literally one of the oldest, stodgiest institutions. You know, it's the All England Lawn Tennis and Croquet Club. That's what it's called, right? That's the official name. They are adopting the line technology, right, finally, after US Open's done it for years, Australian Open, using AI tools, right? So that tells you that we're in the massive adoption phase. And only thing I would say on the consumer side that affects financials, which might be interesting, is just that you can't have a rip and replace kind of approach to the adoption of AI within some of these institutions or companies, because it's not going to be, you can't like have agentic AI where it's payments are being done automatically without human intervention. We're not there yet. And when we get closer to that, then there will be regulation, and that will slow things down. And also, I would say, as I used to work at the SEC. I mean, the SEC is using AI in how they regulate people, right? So again, that doesn't affect consumer as much, but it definitely affects consumer, right? And so the government is using AI, and you have to think about when you're building your businesses, what that means and how you go about your practices. So you can't completely take the human out of it yet in a lot of areas. So that's the only point I'm trying to make.
Yeah.
I just came from a lunch discussion with a lot of other OPs on the AI adoptions in my industries, like how to evaluate managers and how to do what kind of tools to take notes. I think those are changed the way that we interact with managers a lot. But fundamentally for what we do is to build relationship, to evaluate people. Like I think the good thing is that the AI tools help us with efficiencies, but I still remember during the COVID time period, people were not able to meet in person, and I would say that a lot of people acknowledge that that was the time they make a lot of mistakes. We make mistakes underwriting managers, and managers make mistakes underwriting people because they were not able to meet in person. So I think for me, like the good thing about AI is that it will help us with efficiencies to evaluate people, but at the same, it really comes down to like how long, like the relationship is the main things that we can have offer in our investment program.
I think you said something there, like in evaluating people. Like, that is the other part about in an age of AI and post-COVID, we forget that not only is like AI is coming gangbusters now, but we just had a whole period where everyone worked from home and began to learn to take meetings on Zooms, and human interaction kind of became less natural, right? And like we almost had to reintroduce it back to work has changed. I'd be very interested in everyone's perspective on in office, out of office, if that's important for teams. Like, do you ever evaluate founders on that? But we, not just because we named ourselves Human Ventures, tend to think humans are important. We brought on a world-renowned relationship therapist, Esther Perel, to be an advisor to Human, because we felt that like being good at being human is where alpha is going to come in. And we think physical, real world, like you need trust, because no one knows. I've stopped responding to emails if it's not sent to me by somebody I know, because I just can't tell if it's AI or not, right? And so if you're not good at networking, so tell me a little bit about how you evaluate people's people skills, or human skills, as I prefer to call them, in this age of AI, and how important that is in investing.
Maybe I'll take it up one level, which is to say if we're talking about the next wave of technology innovation, I think there's a focus on hyper-personalization, and that really translates into the way that we evaluate people and the way we evaluate companies, which is to say that like everything needs to be a touch and a feel in order for there to be trust. To your point about human capital and where that exists, like we won't invest in a company unless we meet them in person anymore. Like, and to your point in COVID, like that wasn't always possible, and not that we made mistakes necessarily, but there's so much that you can glean by meeting a human being in person. And so now we've expanded our team from just being in Los Angeles to having a presence in New York and Austin. And I spent a bunch of time in San Francisco just to make sure that we're touching base there. But I think human motivations are ultimately what is going to be the differentiator when or if products are easier and easier to create. So it plays an integral role. Esther's incredible. He's come up for you guys.
Yes,
Yeah.
Like for us, we think that evaluating humans, like who that person is and where that person's network is and where does that person stand in this ecosystem is very important. I think that one of the things we really need to do when we evaluate a manager, eventually make an investment, is that we do almost 30 to 60 reference checks to understand who that person is. Like you can have a really good like track records and look amazing on paper, but sometimes we hear something from the former LPs, the former employees, and and really things that we didn't discover before. That was the time that we called it off. And then I think the other thing is that there's a lot of boomings and amazing things out there, but there's also a lot of frauds. Like for example, we visited India earlier this year, and it was amazing to see all the developments in India. But at the same time, we're also cautious about financial frauds. The builders AI that story was massive. Like was not an AI algorithm, but instead it was Indian engineers pop out all the prompts. So that was something that we also need to be very careful about. AI can help us to do better due diligence, but at the same time, with the human element it's always the most important thing.
Yeah, and I think the Anthropic CEO said recently that 50% of all entry-level white-collar jobs will be gone in 10 years, through AI adoption. I really hope he's wrong, He might be right, but I hope he's wrong. I think that what I would say we've seen with employees, we were always a big be back to the office because it's just important, and my partner and I guess are old, but certainly older than all the folks on the panel. But I think what's different about hiring is it's going to change how education is done in this country, because if a young person doesn't have working skills with AI that are applicable to what you do or in general and can do some software development like Joe and Amanda can, I mean, they're going to be in trouble. They're not going to be that interesting to an employer if they're in a growth industry or they're in any industry for that matter. And so that's what I think is the change we're going to see, is how kids are taught. Instead of trying to evade doing an AI-generated paper in college, getting caught, they're going to be hopefully taught how to use AI in constructive ways that make them more employable and better at whatever vocation they choose to go into.
So we've talked a lot about AI, and we could actually apply, I don't think AI is a category as much as it applies to everything. Like self-driving cars are more possible because of it. But is there any other technology waves besides the crypto and AI of it all that you think you're considering when you're looking at investing right now? Is there anything else out there that defense has become an entire category? Is there something that it's interesting to you that might not be in your core area of remit?
We do a lot of investing in healthcare broadly. I talked about it a little bit before, but I think personalization and customization in healthcare, both for acute care, so things like eating disorders require a specific type of care delivery, but also the focus on longevity is something we're spending a lot of time on, which can present itself in a lot of different ways, whether it's services or products. So we're spending a ton of time there. I think there's going to be an increasing amount of spend, both in terms of future acquisitions in the space, but also consumer spend going into the category. And I think there will be a lot of interesting companies built within longevity. Ultimately, being able to build social trust about a product or service is really important in that category in particular. And so leveraging celebrity to access those companies is a great unlock, but something I think we'll be spending a lot more time on going forward.
I would say there's a lot of unloved sectors, like biotech is one of them, but I firmly believe that biotech will be impacted by AI and improved by AI. So I think that was something that we're always spending time on. And the second thing is that there's a lot of areas and countries that is not US centric, but that have a lot of talents and a lot of things going on that people might not be aware of. For example, we invest in a European invention manager that has a lot of grew up in Estonia, and so they invest in the Estonia ecosystem. We have no idea before we invest. There's Skype that was coming out from the country. There's a lot of unicorn Ys. So we were actually really surprised, and we feel like that's something that we as an allocator, we can add some alpha into our investment program.
And I would answer that by just talking about, I won't name the company, but one of our portfolio companies is basically, the premise of the company is it helps you evaluate, it's called Sandbox Platform, where you go evaluate a product before you actually, from a vendor, before you buy it or do, before you commit to it. And you do it in a safe area away from your core business, so you're not monkeying with your core business while you're testing it out. And they're using that as a tool it didn't start out this way, but it's now a tool to help people evaluate AI applications and AI use cases in their company before they go live or before they adopt it. And I think that is just super clever. I mean, that's just a smart way of dealing with this new world of AI. And you know, I'm in the asset management business. There are some products out there, Hebbia, Blue Flame, that you know, do data aggregation, and the other one does documents, which, you know, young lawyers are not needed anymore. Going back to my white collar jobs, they're going to go away. That's one for sure. But it's you know, you want to try these things out before you actually adopt them, and I think that's going to help a lot of, you know, kind of older companies get comfortable because they can do it in a safe area. So I just think that's just an interesting aspect that we're seeing developing out there.
Joe, can I turn the question back on you? I feel like I invest slightly later stage. I guess Joyce has a view across the spectrum. Like, you're a little bit more targeted, but you're a very early stage investor for the most part. Like, where are the categories that you're spending more time on?
Yeah, for sure, we look at like what second order AI is going to impact. So let's hope it's not a ton of joblessness, because that'll have a whole different set of things. But if you're going to live longer and you're going to have more time on your hands, leisure activities and experiential, right? And then anything that AI can power physical real world, because molecules are going to be limited. So we have the fine digital art display. Now AI helps power it, but making the thing is the hard thing. Love experiential because there's only so much time in a day. So people are going to optimize the 24 hours they have in a day, and they're spending in that way. So love that category. And then we just look a lot in the healthcare, kind of where you do it. Like, you probably know Evie Health and stuff. Like, what are all the categories where people are going to spend when AI makes everything else easier? Huge areas.
It's awesome. We talk a lot about the third space, which is increasingly people are consuming less alcohol, for better or for worse. And so they're not going to bars and restaurants to meet people. And it's like, what is the place outside of work and home where people are spending their time and their dollars? And I feel like that experiential theme plays really well into that.
Yeah, no, it does. And then at the end of the day, like, the thing we think a lot about is, if everything downstream of search is up for grabs. Remember the old overused Craigslist, like, you know, it was unbundling and then everything became billion-dollar businesses. If you look at the largest performance advertising company, like D2C, media companies, travel, like that, all those categories are kind of open, and the question is, like, what is the interaction going to look like? So I guess the counterintuitive point is that brands will matter again. Because I might not want to ask ChatGPT what men's fall fashions are. Obviously, I don't try too hard. But I might ask GQ's AI what men's fall fashion are. So like, the brand wrapper might matter again on the other side of this, whereas search and Facebook atomized those brands. Because that is where they're making money still. Like, New York Times has Wirecutter. What is Wirecutter in the age of AI? When I ask AI what the top 10 things are, no one's getting affiliate links. So those business models are trillions of dollars in market cap that people are going to be going up for now. So we only have a minute left. I'm going to go through everybody. Just any final thoughts kind of going into this rainy, what's today, Tuesday? The rest of the week people should be thinking about? Let's start at the end.
I mean, I just think it can't be emphasized enough that we're really at a tipping point. I mean, if you look at the big six, you know, tech companies in America, they're spending 15% of their revenues on CapEx for AI. Last year was 8%. I mean, we're at a tipping point. It's not just Wimbledon adopting it. I mean, it's like, it's pervasive. And so, you know, it's just, we're at that tipping point. And I think it's an exciting time to be in, you know, whether it's healthcare or financials. It's really an interesting time, and very excited about the future in that regard.
I would say exciting time, but be aware of the high valuation.
Yeah, cautiously optimistic. A lot of value being created, but I think a lot of value to be destructed as well. So we'll see.
Yeah, and my final thought, like as I think there's as much risk as there is opportunity. There's probably never been a better time to be investing. There's never been a larger platform shift. You got to find people that are adaptable. So we are ending right on time. Good job. Thank you, everybody.
Thank you.